welcome to NDTV Profit. Joining me today is a very special guest, veteran investor Mark Mobius, who joins us from very exciting sunny Brazil. Thank you, Mark. It's always such a pleasure to have you on the show.
Thank you.
To start with, Mark, like you said, you traveled extensively in India a few months ago, visiting 6 cities across various states. Tell me, how do you feel? Do you feel the real economy on ground is as exciting as the equity markets seem to show it to be?
There's no question there's an incredible amount of growth and dynamism in India. In all the places we visited, I felt this incredible energy. And what's so important in India, in my mind, is the different cultures. You've got these different states with quite different cultures, but something holds everything together. So there is a sense of being Indian, but yet also being from a different part of the country and having a different language, which gives India tremendous strength, in my view. So I was very excited and very pleased by what we found in India.
Mark, you've tracked India for decades and you've always been a fan of India in some sense. Do you feel like the tide is finally turning in our favor? Do you feel like on ground the real economy is truly changing?
Oh, there's no question about that. It's very, very clear that things are changing dramatically and very fast. And I think there are two reasons for this. One is technology. Thanks to the government, they are pushing technology and digitization. And I think that is very, very critical to the growth of not only India, but other countries around the world. But India is grasping that very forcefully. That's number one. Number two, you've got a young population, and these youngsters can adopt and adjust to this new technology more quickly than the older people like me. So I'm learning from my young staff now about technology, and it's a wonderful thing to see. So India's got those two very dynamic things happening, and of course, added to that is the incredible cultural background that you have in India, the tremendous creativity. Just like we were mentioning, the beautiful picture behind you illustrates how young people can create something so great, so colorful, and so creative.
Wow, you've really put that well. Let's talk about it in a little more detail, right? And I know this because we've seen this in the last decade. India has always been an exotic location of sorts for a lot of foreign investors, right? It was all about a little bit of exposure to India just because it's a large country, and that was the story. Now, of course, we've become rather significant for the world. India's inclusion in the JP Morgan Bond Index was a step in the right direction. A Bloomberg inclusion could be on the charts as well. Do you feel like when you're tracking emerging markets, you will continue to see the euphoria around India now, and going ahead, that's only going to, get larger and bigger?
Yes, I think so. You're going to see the euphoria continuing, but you must remember that when we look at stock markets around the world, whether it be India, US, China, wherever, there'll be ups and downs. So you've got to remember that there will be times when the Indian market comes down by 10, 15%, but that won't be significant. The significant thing is that the long-term growth trend is in place. And what I think has really changed is not only the fact that India is growing at 7%, but the fact that China now has become a place where many, particularly US investors, but global investors generally, have burnt their fingers and are very careful about putting more money into China. And of course, where do they look? What's the next place? It's got to be India because it's the only other country in the world with over 1 billion people, and the young people at that. So I think India has benefited from uh, that situation in China. Now, it doesn't mean that China is going to be down forever. There will be
Yeah.
some recovery. It will take time. In the meantime, India will benefit from the shift of investment money from China to India.
Mark, you're an ace investor and you've, invested in emerging markets for a very significant period of time. in your emerging market portfolio, how much percentage of exposure do you hold in India?
Right now, we have 25% in India, and that'll probably be growing. And of course, my new fund will look very carefully at India and probably have more than that.
So, what happens to incremental funds in that sense? Would you continue to still add to India, or would you then balance it out and add to other countries across the emerging market pack?
Well, of course, we've got to be diversified. There's no question about that. We can't put everything in one country, but India will probably be the largest single country allocation for a number of reasons. One, of course, the values are there, the growth is there, but also the size is there. The Indian market is big and it's growing.
So, Mark, this brings me to my next question, and you alluded to that. India has historically been touted as an expensive market. It still is expensive, not very much has changed. The only thing that's working against us, maybe, is that China has become really cheap now. Do you still feel like the risk reward and the growth prospects are in favor of India even at this stage? So while the structural story is intact and it still remains a buy on dips market, at these current valuations, at these current prices, India is still as lucrative and attractive, you'd imagine?
When people look at valuations, more often they will look at price earnings ratios. The problem with that metric is that you're in a situation in China where the earnings growth is not as great as what you see in India. So the PE ratio in India, because uh, the price has moved up faster than the earnings, looks expensive. But if you consider the growth rate of earnings, India could be considered cheaper. So that's the reason why we usually don't look at price earnings to value a company or market. We look at return on capital. And of course, we look at EPS growth, earnings per share growth. But the key, of course, is how much is a particular stock or market returning in terms of the money invested, the capital invested. And in that case, India is doing very well.
Right. Mark, I did listen to a recent interview you did, and where you said you like the broader markets because they do have a larger potential to deliver, and the next leg of growth is going to come in from the mid-cap stocks or mid-cap companies. Have you spotted the next HDFC Bank or the next Infosys or even the next Reliance Industries?
Of course, we're always looking for those companies. And as a rule, we try to avoid companies that are in the index, which means that they're big, they're well researched. We like to look at companies that are in the middle and small category, which are not in the index, but which have good growth potential. Not all of them are good targets, but many of them have tremendous growth potential and have a high return on capital. So what we do is we look at those companies and see which ones are going to be the next companies in the index, because eventually they will graduate to be part of the index and then be heavily researched. And the advantage of looking at the small and medium category is that there's not much research. And so we can do our own research, and we know that we're learning something that perhaps other people don't have.
Right, and I'm going to try and pick your brains to understand what those stocks are and what sectors they are in. Government-facing sectors such as railways, defense, infrastructure has been the big theme all through 2023. Some of them have done, upward of 200 to 300% returns. With a continuity of policy expected, I know we have elections around the corner, but a lot of that is already discounted and given in that sense, with the ruling government staying on. Do you feel like this is a good space or a good proxy to play India? And if yes, do you own anything in the railway or defense space or infrastructure?
Yeah, some of these infrastructure stocks, like the railways, airlines, roads, toll roads, that sort of thing, are quite interesting. Uh, but many of them have a relatively low return on capital. So you have to be careful. And then also, you have a problem with government regulations, which could limit the profitability of some of these enterprises. So, and of course, most of those companies are large. They're not in the middle income or the middle profit sector, but in large size. So we try to not look at such companies. But certainly it's not beyond the realm of possibility that we will look at some of these companies. I think the key, whether it be in transportation, whether it be in infrastructure, whether it be in banking, the key, of course, is technology. To what degree are these companies utilizing technology to improve their profitability and improve their growth prospects? So that's what we look at. Um, and there's some of them that are doing very well and are doing some very interesting things. So we're not, we love technology, but it doesn't mean we're going to buy only software companies or hardware companies in the tech sector, but we will buy companies that use this technology to improve growth prospects and profitability.
Mark, would it be possible to give me examples of those companies?
Uh, I can't give you any examples now because we're in the process of buying. And
Anything that's already been bought.
so I prefer not to name specific names.
Okay. Okay, talking about technology, AI, and I know that's a theme you're enjoying learning about. The big conversation these days is about EV, right? Uncharted territories. We're only scratching the surface in India. Is this a theme you like? And if you do like it, how would you play EV in India? Would you buy OEMs? Would you buy auto ancillary? I mean, is this even a space you're attracted to in that sense?
Right now, we're not too excited about EV for the simple reason that it is a very crowded market. Recently, I was in China and we were driving from one city to another, and we were using different electric vehicles, and they were all very, very good. They were excellent, and the costs were low. So, and I think the same thing is going to happen in India, where the competition will be very keen, and prices will be competitive. Profitability will not be that good. Of course, you could have a Tesla in the horizon, but I think that is pretty much over. The opportunities are over. And now, the other side of EV would be the suppliers to EV companies, whether it be the batteries, the battery components, or other aspects of the electric vehicle. The electronics in electric vehicles would be an interesting area. So that's what we would look at. We would look at the suppliers to electric vehicle makers.
So batteries, tires, anything to do with going into the manufacturing of the EV car.
No, just the suppliers. For example, the
Just
software, self-driving would be kind of
I'm already
software that
thinking of a company in my head. Tata Tech does some of that work for EV space, but sure.
yeah, there's
Also,
lots of opportunities.
yeah. Also, keeping the focus with tech, do you like fintech in India?
Yes, I like fintech, but you must remember that the central banks around the world, including the Reserve Bank in India, are looking more and more at fintech and are devising their own fintech solutions. Here in Brazil, for example, the central bank has created a payment system, uh, online payment system that's very efficient, and it would be very difficult for the private sector to compete with that. In India, as you know, the central bank has instituted a system for payments which obviates the need for some private sector initiatives in that area. So I think you have to be careful, not get too excited about fintech. Not that it's not important and in critical and growth area, but still you've got to be careful about the investment in such areas.
Do you own fintech stocks in India, Mark?
No, we do not.
You know, you talked about how you saw roads and the construction activity that was happening around the space. And I want you to talk a little bit more about infrastructure for me. Just like auto, do you think for the infra pack, the better way to play the space is through the ancillary or the supply side that goes in? So, cement, for example, paints, uh, pipes. Is that a better way to play the infrastructure story in India? Or would you still
Yes,
go
I would
with
say so.
broader
Yes.
market, smaller infra companies?
Yeah, I would say so. Normally, we stay away from infrastructure construction companies because you get involved with a lot of problems. Um, Corruption in the construction industry globally is a big, big issue. And of course, that's true in India as anywhere else in the world. So you don't want to get into that sector. But some of the people who supply the materials, for example, pipes and steel, that sort of thing, if you have an efficient producer, then there would be good opportunities in that area.
You know, Mark, we've seen a little bit of a few data points. We've seen earnings. There's a bit of a divide when we talk about the consumption cycle in India. The biggest story in India has been, the population, like you said, which sort of translates into the fact that we've got a massive rural population as well. What we've seen for a lot of these companies is rural consumption is still not picking up. Interestingly, what's picking up is aspirational consumption. How do you look at that space? Do you feel like rural consumption is probably the best place to be in because in order to get to aspirational, the rural has to move up the food chain in that sense? Or would you stay invested and buy companies that play the aspirational segment in the country?
Well, I would say that rural consumption actually is going up, but it's not being consumed in the rural areas. It's being consumed in the cities because you're having a massive move away from the rural areas into the cities. So it may seem that the rural areas are not consuming, but in fact, those rural area inhabitants are moving into the cities and consuming. And of course, uh, a lot of this consumption is aspirational. If you go to any part of India, you'll see people not only buying the essentials, but buying all kinds of other things that are not essential, but are aspirational.
Okay, so if you had to bet on the space, would you pick staples or would you pick pick urban consumption focused names?
I would look at the urban branded area. Um, at the end of the day, it's a very interesting phenomenon. People in rural areas, when they consume, they want to buy a brand because even though the price point is very low and the unit volume is low, for example, if you buy soap powder, it'll be in a little packet rather than a big container. They will want to buy a brand because they don't want to waste their money on something that doesn't work. So I would look at branded products. And if you look at India, the most successful companies are those with very credible brands.
Mark, also with the amount of money that's been flowing into this country, and you mentioned that as well, do you feel like private investments are still attractive in India, or do you think secondary markets are so compelling at this stage in India that I'd rather go into a space through the secondary market as opposed to go into private investments? Where do you feel like all this money is flowing in?
Well, private sector investment is going to be growing at a very rapid pace in India. It's already big, but it's going to be growing faster. And the reason for that is there are so many family owned companies that don't want to go public, at least at this stage, but they need capital, they want capital, and that's where the private sector will come in. Private equity will come in and invest in these companies and help them grow. Then at the next stage, they will go listed. And of course, you can see it's already happening in India. The number of IPOs in India now this last year as more than, I think, 5 times more than the previous year. So 22 versus 23 has been quite a dramatic increase in IPOs. And I think you're going to see that continuing going forward. Nevertheless, there are lots of family companies that have not gone public and don't want to go public at this stage.
Have you subscribed to any of those IPOs in India?
No, we normally don't like IPOs because usually they're priced to perfection. So we
They're
prefer
priced.
to see a track record first.
Right. Mark, we've talked about all the good things in this country. Are there any risks? Are there any obvious risks that you're concerned about at this stage?
Of course, there are always possible risks. One is the overheating of the market. I mean, there's been so much optimism about the market, and there's a possibility there'll be a correction along the way. So that's a possible risk. The other possible risk is a change in government policies. Now, the current government is doing a terrific job, and I know uh, Modi has recently announced a big infrastructure program, which is terrific and badly needed. So far things are going very well, but if there's any pullback from that, it would not be good news.
Right. Also, with your portfolio, Mark, your India portfolio, I mean, what is the period of holding that you have in some of these stocks? How do you call for exits? Is it when there's a requirement of cash from a client? Is it when you see a stock specific company topping out, or when there's a trend reversal? Help me understand that. I want to know when you buy a stock, what is the time horizon and what are the triggers that you watch out for before you, of course, take profits off the table?
What we do is we look at a stock and we make the plan to hold it forever. In other words, there's no reason to sell a stock if they continue to do good, have good profitability, have good growth. So we normally say, well, about 5 years would be the time frame. But in fact, we don't plan on 5 years. We plan on forever if the company continues to do well. Nevertheless, as you mentioned, if you're running an open-ended fund, some clients want their money back and you got to give it to them. And that means you got to sell some stocks. So we're forced sometimes to sell. And that's the reason, by the way, we want some degree of liquidity when we buy a stock. But the plan when we buy a stock originally is not to sell, but to hold as long as the profitability continues and the return on capital is good.
And what is the return on capital that you look for? I mean, what are the sort of returns that you expect when you enter a given company or the country? At this stage, what is a fair expectation for investors to expect from the Indian equity markets over a 3 to 5 year period? Even though I know you're a forever investor.
20%, at least 20% return on capital is what we look for. And by the way, companies that have that characteristic uh, often meet our second criteria, which is low debt. Because if a company has a 20% return on capital, chances are they don't have to borrow. They can finance their growth internally.
Low debt, that was a good one. So low debt has to be a tech AI play. Anything else? Anything else that you're tracking that you like? Just forward-looking sectors, maybe beyond tech and AI, that you actually seem that have caught your fancy.
One of the things we're looking at now, it's not too early actually, but we're definitely looking at the area of technology in terms of hardware. As you know, India is an incredible producer of software. And of course, India is a big exporter of software around the world. But what we're thinking is that going forward, India will have to be a big producer of semiconductors and of other components, hardware components. Of course, they're already producing cell phones, uh, laptop computers, that sort of thing, but that will grow. And all the ancillary industries that support the computer side, the cell phone side, and so forth, particularly semiconductors, will become a big industry in India.
That's a good one. So semiconductors, that's another space to watch out for. Very lastly, Mark, green energy. I mean, it's all about new age and sunrise sectors. Anything in the green energy space that's caught your attention?
Of course, if you look at solar energy, it's growing by leaps and bounds around the world and will continue to grow. Again, unfortunately, it's a very crowded area, so we have to be careful. The Chinese have pushed prices down to very, very low levels, so it'd be difficult to get into that. But I would say uh, the silicon and all the other components going into solar cells would be something of interest.
Very lastly, Mark, in your new portfolio, in your new fund, how much percent of India allocations already completed?
We haven't started yet. We're just in the process of forming the fund. So it'll be, let's say, 3 or 4 months from now.
Exciting. So hopefully we'll catch you then and get some more on those stocks that you've cherry picked.
I look forward to it.
Great talking to you, Mark, as always. Thank you very much. And yeah,
Thank you.
we'll hopefully see you soon.
Okay. Bye bye now. See you again.